Cathie Wood. So Cathie Wood has some interesting statements that I want to go over here, and I want to talk about what she's saying essentially. We're going to watch this clip here. It says, "The risk of recession has gone up dramatically," says Cathie Wood. We're going to watch this one together. I'm going to react to this one. Cathie Wood of ARK Invest says she still expects to see significant returns over the next 5 years. So we hear what she has to say there as well, and I'll react to both of those short clips, okay? First off, before we get into that, I wanted to go over two things. This first one is DocuSign. So DocuSign just tanked. This stock back in August, late August, was $310 a share. And after hours, it is $76 a share. I think everybody knows DocuSign, the e-signing, massive company that they are, right? If you ever e-sign something, good chance it's from DocuSign. And if not, it's from HelloSign, which is owned by Dropbox. And when it comes to this company, it just kind of hit me right now. And I was thinking about this, right? And I was thinking about the last, 14 years I've been in the market. And essentially what I was thinking was this market is the biggest risk on to risk off market I have ever seen in my life. And not only that, if we go back throughout history, so way before I started in the stock market in 08, 09, okay? And we go way back to all modern time, to even like the 2000, to the 90s, to the 80s. This is, outside of maybe the tech bubble, the biggest risk on to risk off time period we've ever gone through. And not by a little bit, but by a lot. And I think this risk on to risk off is actually far more severe than the tech bubble. Because at least in the tech bubble, you can say, well, it was a bunch of companies trading at crazy valuations. And a lot of them, didn't have business models or had, business models that were a joke, okay? Think about this for a second, right? Think about this for a second. We are seeing right in front of our eyes companies that have legit huge business models with a decade, if not several decades of growth in front of them, right? Fall dramatically. We're seeing companies that are doing billions of dollars of revenue, right? We're seeing companies that are even profit machines. And we're seeing those stock prices fall 50, 60, 70, 80, 90% in a matter of a 14-month span, essentially, right? And so that's why I think this is the biggest risk on to risk off market we have ever seen. Not just in my time of being in the market the last 14 years, but literally of any time period in modern history. And in these sorts of markets, there is going to be so much money to be made on the upside of this once we get past all this wall of worry we're going through right now, whether that's in the back half of this year or whether that starts in 23. There will be, some of the biggest fortunes ever made, I'll just put it that way, coming out of this mess. Just as if you were playing it from the other side, when we went from, this crazy bull cycle to this massive bear cycle we're in right now, if you had played that perfectly, oh my gosh, okay? And so that's why I'm putting my chips, obviously, where I believe they're set. I do not own DocuSign. It's not a stock I'm personally interested in. I think Dropbox is a better value than something like a DocuSign, but there's no denying that this is a historic period we're going through in the stock market that will be forever talked about. I can promise you that. I'll be talking about it as long as, I'm in the market, this massive risk on, massive risk off. Now, before we get into this, if we want to take a peek here at Cathie Wood's top 25 holdings, okay, this is my website, CathieWoodStocks.com, that tracks Cathie Wood's ARK fund literally on a daily basis of what their weight is in terms of each individual stock, their market share, things like that. So if you want to just keep it open on your desktop, you always can. So Tesla is obviously they're still their biggest weight, 9.8% there. Teladoc got hammered again today. Teladoc can't, get out of its own way when it comes to stock price right now. It's just gotten hammered again. This one fell about, I think it was like a 7% fall for Teladoc here today. The weight is almost 7% for, Cathie Wood's ARK fund here with Teladoc. Roku's their third biggest position at 6.3%. Zoom, 6% weight there. It's interesting. I saw a paid post on CNBC. I was going through CNBC's website, and I saw this headline. It said, how Zoom could change telehealth. And I was like, oh, wow, that's interesting. And then it said paid post for Zoom. And I was like, oh, okay. It's just interesting. And so it kind of made me think, I was like, I wonder if Zoom really wants to get into the telehealth space. And I wonder if there's ever like a, I don't want to say Zoom would ever acquire something like a Teladoc or something like that, but it does make me think if they really want to go that route, maybe that's something that happens, or maybe they become competitors over time. We'll have to see all that shakes out, but that's interesting. That could be, number 2 and number 4 biggest positions there. Coinbase is their 5th biggest position. Block is their 7th biggest position, which is just still having trouble just, finding any sort of footing in this market. It had its good kind of uptrend after that earnings, and then it's just been falling back down pretty much ever since. Shopify has been getting absolutely leveled recently. DraftKings as well. DraftKings CEO had something interesting to say recently. He said, it almost reminded me of a statement like an NFL player would make if the teams passed on them in the draft. He said, I hope to make everybody that's been selling off our stock, I hope to make all of them regret that, and it's the worst decision of their life. So I was like, geez, that's an awful big statement there. The Robinhood, I don't know what they can possibly do to change that business model in the short term. Like their comps are going to be so impossible to hit over this next quarter or two. It's vicious. So anyways, that covers Cathie Wood stocks there. All right, guys, let's get into these clips, and hope you enjoy this as always. Thanks for joining me. Much love. Make sure to subscribe to the channel. Get some free stocks from Moomoo. If you want to talk about the risk of recession going down dramatically, get your free stocks from Moomoo. Check out pinned comment down there. Right now, with any deposit, you get 3 free stocks. One valued between $300 and $3,500, one between $9 and $3,500, and a free share of NEO. It's like a no-brainer. All right, let's get into this.
The other markers in the market right now, particularly as it relates to the war in Ukraine. Have we seen peak market impact yet, and what should investors be focusing on here?
It's very hard to say if we've seen peak market impact. I know the markets are getting hit today. Typically, the way we see the peak is through the VIX, the volatility index. And it has moved up. It's in the mid-30s. I'm not sure what this morning is. And the shock in 2018 and the one before that got us into the low 40s. Of course, the coronavirus got us to 80. But we're getting close to those cathartic moments in the past.
Let me pull up a VIX chart so you guys can see what we're looking at. A little better one than CNBC has here. Alrighty, folks, I pulled up here on TradingView a 5-year of the VIX essentially. And, if we look at the VIX over the past 5 years, for instance, yes, Cathie was right on what she's talking about there as far as VIX. Here on the TradingView it says 65, but this does it on like a weekly basis. So on an intra-week, I believe it was, over 80 plus, as she states, which is just crazy to think about. Recently, we've been trading kind of in 37, 36 range very recently. If you go back here to the massive drop in the market in December 2018, which we were on pace for the worst December in the history of the stock market at one point until we got saved in the last few weeks. We were at like a 30-ish and a little above a 30. During that time period. If we go back to, there was a random spike in February of 2018, somewhere around 30-ish roughly. So, when you see these big spikes to 30 plus, you're in a very, very volatile market. Now, when you start talking about, a VIX going to over 35 specifically and talking about going to 36, 37, you are in an extremely volatile, very fearful market. And if you ever get VIX to spike to, let's call it 40 plus, oh boy, okay. That's when you're in a holy smokes, this ain't no joke, is like, just straight up panic out there in the market. So that's kind of looking at that there. I don't know why Very made such a huge move. I'm going to have to look into that one here today. That was an interesting move. By the way, Teladoc, I know I mentioned Teladoc just a moment ago. Let's see. I know I got that on my stocks I'm watching. Oh, yeah, Teladoc. 9% downward move it ended up making today. That's just massive. Down to a price-to-sales ratio of 4.75 now on Teladoc. If we look at this one, just look at it over the past year, for instance. 4.75 now. Price-to-sales ratio was a 27. From a 27, that's how much of a risk-on market we were in a year ago, to a 4.7 now. That's just vicious. And, from a market capitalization of 30 billion plus to now trading around 9 billion roughly. Oh, just vicious. A price to book on Teladoc now of 0.6. 0.6 price to book on Teladoc from about 2 previously. Incredible. Just incredible move there. I mean, just, geez. That's all I got to say about that. Jeez. All right, let's get into this.
be surprised if we do go to the coronavirus levels, because remember, people were expecting a depression. The whole world shut down. This is not that. This is going to cause a lot of problems from a purchasing power point of view. I think the risk of recession has gone up dramatically as purchasing power is dropping dramatically. In the U.S., the consumer saving rate already is down to levels we have not seen since 2013. So that buffer that the stimulus payments created during the crisis, that's gone. And so consumers are probably going to pull back. Sentiment suggests they will, and in some ways they already have. If you average over the last 3 months, this is U.S., consumption in real terms has been pretty flat.
So that's an interesting statement she made there. From what I've been seeing, consumers look pretty strong, but that could easily flip, and then all of a sudden, in a few months, it's a different situation. But from everything I've been seeing in the real world, it looks like the consumer's pretty darn strong. So, but time has to play out in all these situations, and we just have to see kind of what happens here. Okay. So this one, Cathie Wood of ARK Invest says she still expects to see significant returns over the next 5 years. Now, something I think's interesting here is she's talking about the risk of recession's gone up dramatically. She says that's her quote, dramatically. All right. So she's saying that, but meanwhile, she's still holding a lot of these stocks that are seen as kind of riskier plays. It's not like she's changed her portfolio to buying Coca-Cola and Johnson & Johnson and Kimberly-Clark, and Honest would be a good buy for her, okay, HNST. But she hasn't done that, right? She's still playing the game from more of a dangerous angle in terms of a lot of these stocks. So I don't know, even something like Tesla, I think about, right? And like, man, Tesla's benefiting huge from gas prices going up insane, and a lot of people considering EVs for their next car. And if you're thinking about EV, what's the number one player you're going to think about? You're going to think about Tesla, right? But if we're talking about a real massive recession, there's no doubt that Tesla would be hurt in that scenario, right? There's no doubt at all that if there was a massive recession, if there was especially a credit crunch, Tesla would be hitting that as well, okay? So I think these are some things to just kind of think about, but time has to kind of play out here. Alrighty, guys, so let's jump into this now. Cathie Wood of ARK Invest says she still expects to see significant returns over the next 5 years.
Right now, and what's happening in the fund, because Cathie, it's been said that you are in the toughest battle of your career right now. Not only are you fighting against the market momentum, you're also trying to halt huge losses and outflows. So I want you to address this for us. What is the message to investors here? Do you think that the street is just getting you wrong, or is it time to concede that mistakes have been made?
Ooh, I like that question. But anyways, look at this. From February of 21, 156, here today, 59. I mean, it's just, it's been awful, in terms of ARK. But, it's not like you can't see it coming when you see what Cathie Wood owns. And almost every single one of these stocks has been hammered. Tesla's like the one that's held up decent out of this bunch, right? But even Tesla's been hit. It's 838 today. At the peak, it was 1200 plus. And so even a stock like Tesla's been hit. And that's like the best, pretty much of those stocks. So, you can kind of understand in this sort of market where no risk wants to be taken by Wall Street, Cathie Wood can't just buy these stocks herself. She can, but it's not going to push up the price. You need the rest of the buyers out there, and Wall Street refuses. But a lot of big money refuses to buy into the market right now. We hear it. They literally put it out there. I think it was UBS said the other day, we are not buying the dip. We are not buying it. Just no, we're not putting any money in there. So if that's the situation, you have Wall Street thinking like that. It's like, it's very hard to get stocks to go up in the short term if that's the thought process.
So, let's put in perspective. You mentioned 60%, which is absolutely right. We have been in a terrible bear market for innovation. Hard to understand, but terrible bear market for innovation. However, if you look from the bottom of the coronavirus to that peak in February of 21, we were up 358%. Why? Because innovation solves problems, right? Now we're down 60%, and we have a whole new set of problems, certainly coming out of Russia and Ukraine. If you look at our strategy over a 5-year period, look at the last 5 years, I'm not quite sure what the numbers are, but they are well above our minimum hurdle rate of return, which is 15% at a compound annual rate.
So I think this is important, and in defense of Cathie Wood, you got to always. I think in the stock market, it's best to be as impartial as possible and look at things as objectively as possible, right? Because I think it is very easy to make fun of Cathie Wood and the ARK Fund and how bad the performance has been recently. But at the end of the day, I mean, you look at the 5-year, they're up 159% in the past 5 years. That's not too bad. Let's put it that way. That's not too bad. And so I think it is important to, because she always talks about a 5-year span. Every time Cathie Wood first came on my radar probably in 2018, I think it was, when I was starting to, really research Tesla super heavy and actually start buying the stock and things like that. That's when she first came on my radar. And from the moment I remember Cathie Wood, she would talk about a 5-year horizon and, how she always looked at it like a 5-year horizon, which is the same exact thing I look at. I'm always looking at the next 3 to 5 years whenever I'm buying a stock. And she does the same thing. She's always talking about 5-year performance and looking at the 5 years. So that's been consistent with her for the last 4 years since I first found Cathie Wood. So I think it's worth defending her big time there, because her 5-year performance is pretty darn good, even despite getting absolutely kind of wrecked in the market over the past 13, 14 months.
And I think over 3 years, we're closer to 25%. So that helps put our performance into perspective. This is a period, if you believe in innovation, and that innovation does solve problems. We had a preview of that after the COVID crisis, when our strategies in the span of a month, many of the stocks were taken down 75% because either they were burning cash or they had low cash cushions. But guess what? Those were the genomics companies that were going to get us out of the coronavirus. And today, what do we have? We have all kinds of problems, the latest of which is Russia, Ukraine, and all of the commodities coming out of that area, especially hitting Europe. I think we're going to be looking at a lot of demand destruction and substitution into innovation. Electric vehicles as opposed to gas-powered vehicles would be the biggest one. We also have labor shortages all over the place. Again, automation. This is innovation at its best, and it's being turbocharged by this environment as the market is really hitting our stocks. So I think if you were to look at the next 5 years, and if you were to give us that 5-year investment time horizon, we are the closest you'll find to a venture capital fund in the public equity markets. If you were to give us that 5 years, given our expectations for growth in these new technologies, I think we're going to see some spectacular returns.
So let me come at Cathie Wood for a moment here, and then I'll go back to defending her for a minute here. Okay. So, she talks about, everything going on in Europe right now and the Russia-Ukraine situation, commodities and things like that, and innovation is going to help us out. But at the end of the day, I mean, you look at a lot of our biggest positions and it's like, what are these companies really doing to help that situation? They're really not. At the end of the day, like Teladoc's not really helping that. Roku's certainly not helping that. Zoom's not really helping that, right? Coinbase isn't helping that. Block's not helping that. A lot of these biggest holdings, Spotify, how does Spotify help that whole situation? What, are they going to listen to more music and suddenly oil prices are going to go down? That's not the way this works. And so when you look at a lot of the biggest positions, a lot of people look at these and a lot of folks say, are these really the biggest innovation companies that you got your money in outside of maybe Tesla and Tesla, right? So I think that's a fair kind of criticism of Cathie. Now, what I don't think is a fair criticism, and don't forget to get your free stocks from Moo down there, pinned comment. Let me be very clear about this. I don't think this is a fair criticism of Cathie Wood. When people try to attack her like she just got lucky with Tesla or something like that, okay? Because in the market, you're going to have a certain amount of things go your way, like luck, right? And it's going to go better than you expected. You're going to have a certain amount of bad luck going in the market, right? And so Cathie Wood, she's going to have some stocks that they do way better than she ever anticipated, and some stocks that maybe do worse than she expected. That's part of being in the market, right? That's not luck or bad luck or good luck and, oh, I got bad luck, oh, I got good luck. That's not the way this works, because sometimes you're going to get lucky with a stock and sometimes you're going to get unlucky with a stock, right? And I've had many stocks in the past that things went way better than I anticipated, right? Including Tesla was one of those stocks where they just executed even better than I ever anticipated. And that's great, right? On the flip side, an investment of mine, many, many years ago was GoPro, which was a failed investment of mine. And I could chalk that up to, many various things, but one of those being bad luck. Like the drones were flying out of the sky. They tried to come out with this drone product and literally they're falling out of the sky because the battery somehow got unhinged. And they made so many mistakes. Some of that's bad luck. For instance, another failed investment of mine was I started buying CCL right before the Rona started, right? And, I didn't know a once in a 100-year pandemic was going to come out of nowhere. And so I just had started buying that stock, acquiring it. It looked like a great value. And next thing you know, all of a sudden, like a month later, all of a sudden there's all this talk about, there's this Rona and it could potentially come and, be a serious thing. And all of a sudden, next thing you know, it was like, oh yeah, we're shutting down all cruise lines. We're shutting down the world economy. And it was like, what? Like, how? So that's the thing in the market. You're going to have, everybody that's been doing this for 10, 15, 20 years, you're going to have some really good luck sometimes where things go way better than they anticipated, and you're going to have some bad luck sometimes. And so that whole, you got luck, BS, man, that's just straight hate. That's just straight hate. That's like the equivalent of, I've always been a sports fan, and some people try to say, oh, that team got so lucky they won that game. BS, man. That's just some hater stuff at the end of the day. And that's just the way it is, okay? So, the way I look at it, I see Cathie Wood as somebody that's had some things go really, really well for her. But also, think about the unluck part, right? Think about this for a moment. She had all this massive influx of money that she had to invest, all coming at a peak FOMO cycle in the market that she's pretty much forced to invest, right? And now she's in a situation where there's a ton of stocks that are great deals, and she's had to deal with either outflows of money or lack of inflows of money while there's all these great deals in the market, right? And so think about that for a moment. Is that good luck or bad luck? That's bad luck at the end of the day. Like the worst thing you could do as somebody that runs a fund like this, right, an ETF or whatever, is have all your money being poured in there right when it's already a FOMO cycle, and then have massive outflows or lack of inflows when everything's going down because you can't really buy the dip the way you want to buy the dip, right? And so I would say that's actually potentially, bad luck and bad timing there, and that's not something really she can control. So anyways, I thought that was worth being said. So, when it comes to Cathie Wood, I see some criticisms being fair, and I see others just not being valid at all, and just some of them are just straight hate. And at the end of the day, look at that 5-year performance, man. She hasn't done too bad. And as somebody that's I don't have one penny invested in ARK Invest, and I don't plan to invest any money in ARK Invest, although it has been at interesting levels in the 50s here recently. I'm not planning on investing in it. The way I look at ARK Invest is I'd rather just pick let's say I was thinking about putting 100K in ARK Invest. I'd rather just put 20,000 in the 5 stocks that ARK Invest has that I think are the best holdings of that. I'd much rather do that because she owns a lot of stocks. I'm like, I don't know about this one. So that's just kind of my perspective there. Hope you guys enjoyed this video. As always, much love. Let me know your opinion in the comment section. Don't forget to subscribe, get your free stocks from Moo, and have a great day.